Good afternoon, everybody. It's Jed Joling with eXp Realty. Today is Tuesday, July 18th, and it's crazy, but this month and summer are flying by. I'm here to give you a Southern Oregon market update and tune you in on what our market is doing. We'll give you the numbers first. So right now, between Jackson and Josephine counties, we have 1,136 active single-family residences. So active for sale on the market. Last year, that number was at 1,274 right now. So we're down 11% on our active listing count in the residential category from last year. And our new listings for this week for single family residences, we had 126 new listings. We had 112 go pending, 81 closed, and then 30 off the market due to expired or canceled listing contracts. So if we compare that to the 4-week average, we are up 7 1/4 from the 4-week average on the new listings. We are up 4 3/4 on the pending listings, and we're down just 2 1/4 on the closed listings. So all pretty close there with our 4-week average. Comparing this week's numbers to last year, this same week, the numbers from then, we are down 9% on the new listing count. We're actually up 4.5% on the pending count and down 20% on the closed count. So that's one of the first, I think maybe even the first time we've seen this year where our pending count was higher than last year's pending count for that same week. As you know, if you've been tracking with the market at all here and anywhere really, we've obviously seen a lot less sales, a lot less things happening just because of higher interest rates. So surprising now to see that we actually beat out a week from last year, which is great. So speaking of interest rates, right now the 30-year conventional national average rate is 6.9%. The 30-year national average FHA rate is 6.5%. Looking at those rates a year ago, the conventional rate was 5.72 and the FHA rate was 5.25. So we have come up about 1.25 points from where we were a year ago. And we're hoping to see, these rates hopefully dip back down towards the end of the year. But I think where we're at right now is where we're going to stay for at least a little while, just based on what the Fed has told us. And speaking of the Fed, we got our core CPI report out for the month of June. 4.8% inflation for the month of June. And that is less fuel and food, that core CPI report, because the food and the fuel are more volatile, so they like to take that out and look at the actual number without that involved. So that's still much above the 2% annual target for the Fed, so it's more than likely they will follow through with 1 or 2 of the what they were promising more rate hikes on the Fed rate later this year. So we'll see. 4.8% is not great, especially with considering how long they've been battling this inflation and trying to get that down to a near 2% target level. Right now, our inventory level, given our active listing count and the number of houses we are selling on average in a 4-week period, is putting us at 3.15 months of inventory on our local market here in Southern Oregon, meaning if you were to stop all new listings today and just sell what is sitting on the market for sale right now at the rate that we're selling, it would take 3.15 months and we'd run out of houses to sell based on the stats. There's really not much else to report on. The state of our market right now, in my opinion, is healthy. We're still seeing places sell in reasonable amount of time, like we'd gone over last week. Our days on market averages for both Jackson and Josephine County are just between the 40 and 50 day mark. So really not that bad at all. You aren't necessarily getting multiple offers every time you have a listing hit the market. But places are still selling. And for instance, out of the 126 new listings that we had this last week, already 19% of those have gone pending. So, they're priced, they're presented, they're just put on the market and ready to go. And that appeals to a lot of people when they're priced correctly and they're presented well. Pictures go a long way with that especially. But there's going to be always certain places, certain areas where things don't sell as fast. Different demographical areas or different price ranges. It's just got to be a little patient with it. As it's not like last year where things were just flying off the shelf, or the year before. But it does give buyers a little more of a chance now to look around before just settling on the first thing they think that they might be able to get their hands on. Like last year, the year before, buyers were making offers on a lot of things they looked at because they knew they just wanted something, and every time it was multiple offers, so it was frustrating for people. But this is a little bit easier of a market now for buyers to buy in. although the higher interest rates have made it hard to make things affordable. But there are a few ways to combat that with rate buy downs and seller credits to help a little bit with that. But you're not fighting other buyers so much so as you were last year. That's a wrap for everything I've got to report on today. Everything's looking good. Everybody enjoy the weather this week, and we'll talk to you next Monday or Tuesday, and we'll give you the update from this week. So have a good week. We'll talk to you soon. Thank you.